What's good, all my trader and investor homies? Welcome to Touchdown Trades. In today's video, we're going to be talking about a stock that, in my opinion, is absolutely going to crush cable TV. What's the worst part about moving into a new house or apartment? It's not the actual process of moving your stuff into the new place. It's the process of getting cable set up. You have to call the sketchy cable company, and then you gotta wait a couple weeks at least to get the dude out to your house. He shows up, he smells like he hasn't taken a bath in 3 weeks, and then you get your first bill and it's 2 times higher than you had worked out with the guy on the phone a month earlier. That's all coming to an end. Cord cutting is in full effect, and in today's video, we're gonna be breaking down Fubo stock, an online TV streaming service that is absolutely taking off. We're going to talk about why I believe this cord cutting phenomenon is going to be huge business in the next couple of years, and why Fubo TV is primed to be a benefactor of this move. If you're new to the channel, go ahead and do me a favor, hit that subscribe button and go down there and hit that like button for me. All right, guys, let's break down this cord cutting TV stock. Let's get it. Before we get started, check out the link in the description for Fubo. They're offering the Touchdown Trade community 4 free stocks valued up to $3,700. That is free money. Don't miss out on that free money. Also, check out the link in the description for the 2-week free trial to the private Discord chat where you can get my buy and sell alerts in real time. We caught Blink charging before it ran up 100% plus. We caught CLSK before it ran up 300% plus. We've absolutely been crushing penny stocks as well. So check out the link for the private Discord chat. Free trial. All right, guys, let's jump into Fubo stock. It came out with big news the other day. It has me super hyped on this company, and let's take a deep dive into it. Fubo is an online TV streaming service. We've seen a lot of these companies come to market over the last few years. YouTube has their own version, Hulu has their own version, and I think Amazon's coming out with their own version. But Fubo is doing something very interesting that I think is going to be big business and a big revenue producer for the stock, for the company in the coming years. We got the 1-year, 1-day chart pulled up, and we can see that it's been really strong, right? From $8 a share, which is consolidating in that $8 range, and then it blasted up to $62 a share, almost 1,000% move. But we're getting this thing on a really nice pullback from $62 a share back down here to $25 a share. So I think we're having the opportunity to take a look at this super high growth stock at a pretty good discounted price point. Let's jump into the fundamentals. First, let's go over some cord cutting stats. The amount of people who are cutting cable is absolutely astounding. People don't want to deal with the nonsense. They don't want to have to deal with somebody coming into their house, drilling holes in their walls, having to deal with the sketchy salespeople. When you're dealing with online TV streaming, you go on, you know exactly what you're paying and what you're paying for, and you don't have to have anybody to come in your house. And with the influx of smart TVs, you can use these online TV streaming services right on your smart TV, so you're not getting a lesser product versus traditional cable, and you're avoiding all the nonsense that you get with regular cable. So I got some stats pulled up. In 2018 alone, there were 33 million Americans who cut the cord. In Q1 2019, US pay TV providers lost over 1 million subscribers. That is astounding right there, and a large majority of those are going to be cable TV providers. By 2022, 55% of Americans would have cut the cord, and that growth is just going to be exponential straight to the moon. Eventually, nobody's going to have cable. These cable companies are going to be out of business. Of course, the internet side of things is still going to be around. We're going to need internet, but nobody wants cable when you can go online and get it streamed, a better product at a cheaper price point, not dealing with the nonsense salespeople. Sure, your older generation is going to be slower to get to the cord cutting process, but my parents, they're 60 plus and they have cut the cord on their cable, and they have YouTube TV now. They absolutely love it, and I think we're going to have more people doing the same. And what's funny about all of this is that the price of cable keeps skyrocketing because these cable companies, they're taking advantage that their customers they're keeping because of the money that they're losing from the customers they're losing. So the customers who are loyal to these cable companies are getting pillaged by the cable companies. Customers that are loyal are getting taken advantage of. So in 1995, we can see this green bar is the price of cable, and this is inflation over here. So the price of cable versus inflation has just gone straight up since 1995 to 2015. Just a stupid statistic. Why would anybody keep their cable? So in 2020, it was estimated that we have 45 million people cut the cord. 2021, we're expected to have 50 million. In 2022, 55 million. So eventually there's not going to be any people left to cut the cord, and those cord cutting numbers are going to go down. But right now that growth is exponential. That brings us to Fubo TV, ticker symbol FUBO, an online TV streaming service. And what I love about this is its simplicity. You log on to the website, you're looking for cable, or you're on Roku, wherever you're on your smart TV, you'll see the Fubo widget. You click it, and this is what comes up. All right, we're on the website. When you want to sign up, you get a free trial right away. No hidden fees, cancel anytime. So you're not getting the pushy sales tactics of the traditional cable companies. You know exactly what channels you're getting. A lot of the time with traditional cable, you have no idea what channels you're getting, and then you end up having to pay extra for the channels that you want. So they offer different packages, sports channels, entertainment, news. You can add HBO, Cinemax, that type of thing, and you have your choice of package: family, elite, Latino, quarterly, and it has all the channels we need. As a dude, I just need really a couple channels. I need ESPN, I need the local channels to get the good football and basketball games, and maybe during the NBA season, I want to add the NBA package. I'm a big NBA dude, so that's really all I need. And you need news channels, you have news. What's really cool about Fubo TV or all these online TV streaming services is that you can watch them on all of your devices. You're at home, you can watch it on your TV. You're on the road, you can hand your kids the phone, pass the phone back, they can watch their shows. On road trips, it's very convenient. You're in a hotel room and you don't have good cable, or wherever you're staying, you're camping, you're out somewhere you don't have cable, you can watch it on your phone. Really good to be able to watch it on all your devices. So in 2019, they added 316,000 paid subscribers. 316,000 paid. So that's not some stuff padded up number, including free trials. Those are paid subscribers. 300 million total hours streamed in 2019. 144 monthly hours streamed per user. So the users are using the service. They're not just paying for it. And $147 million in revenue in 2019. I expect those revenue numbers to climb straight up over the next 5 years, and even over the next decade as that cord cutting continues. All right, and here's the big news that Fubo came out with the other day. Fubo TV stock surges on its plan to enter sports betting. I am a huge proponent of investing in sports betting stocks. It is already a multi-billion-dollar industry in the United States alone, but it's just been under the table. Now that it's been legalized by the federal government and states are doing the same, we're seeing companies come in. And I think Fubo TV is in a unique position to take advantage of it because of their TV streaming already. They can incorporate the games that they stream on their TV with their betting platform. You can watch the game, maybe it'll have the lines on the TV, right? You got a football game right here. They can put the Chiefs -7 right there. You want to place a bet right from the TV. I think Fubo is really going to capitalize on getting into the sports betting industry. And what I'm saying, I have not heard that they're going to do that, incorporate it into the streaming platform, but I just envision that, and it makes a lot of sense to me. So sports betting is going to be a huge industry. We've already seen what stocks have done, like DraftKings, Penn National Gaming, bounce back really big. We caught a huge trade earlier this year on MGM when they sold off due to the Rhinoceros. We bought the dip. We knew that it was going to bounce back because they were making a play in the sports betting space. Now Fubo TV getting into the sports betting space. There's studies been done. Here we have an article by the AP saying that sports betting market is expected to be $8 billion by 2025. So even if Fubo can only capture a small percentage of that market share, we're talking about a few $100 million in extra revenue brought into the company. That can send the stock 2-3x higher. That revenue is going to be huge for this growth. All right, guys, I got a chart pulled up here. Let's take a look at it, and I'll talk about what I'm thinking and how I'm planning to invest in this and where I think we should put our price targets on this Fubo stock. All right, so we have an obvious area of support right down here towards $30 a share. We ripped up from under 10 bucks down here up to $65, just a massive short squeeze. The short percentage of float short on this stock is stupid high. The short sellers are stuck. Right now we have a short float of, right now we have a percentage of float sold short of over 40%. That is ridiculous. So 40% of the stock is sold short. So as this thing started to squeeze up from under 10 bucks, short sellers opened up short positions. They got short all the way up. They were getting short. They got squeezed. Right here is a great example of a short squeeze where they're stopping out of their positions. But a lot of them are probably still stuck here in this $25 to $30 range. So that is going to act as a very strong area of support in this area right here. So what I want to do is I want to buy as close to that area. The $25 to $30 area is my buy zone for a long-term hold. I want to hold this thing as long as possible as cord cutters flock into these online TV streaming services. Is going to grow, and I absolutely love that they're getting involved in the sports betting space. So I expect this to come down, test 30, and then rocket ship back higher to all-time highs within the next 2 years. So that's a 100% move. Yeah, I'm going to give it a 24-month price target of all-time highs. I think that is a practical price target, and I expect that to get hit. I really like this stock. I wasn't so keen on it when it was making this move up here towards $65. I wasn't going to chase it. But once they say they're getting into sports betting, it really piqued my interest, and I took a closer look at it, and I really like it. All right, guys, that's going to wrap up this video. I hope you got something from it. If you did, do me a huge solid and hit the like button for me. If you're not yet a subscriber, hit the subscribe button and the notification bell, and check out the link for the 2-week free trial to the private Discord chat. All right, guys, I'll catch y'all in the next one. Until next time, peace.